Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of February the 26th, 2018. Now, to get started this week, we're going to begin where we always do with the US dollar index. We can see that the dollar is recovering yet again, but this is a very familiar pattern. We have significant resistance coming in on the dollar index. I'm just going to draw it in here so everybody can see it. That's coming in at or about the 90.45 area. Now, we do have a trend line break here, but the problem is that essentially for the last 4 or 5 weeks, we have been basically just range trading here, guys, between the 88.20 area and the 90.45. So a break of 90.45 in the dollar index should see excuse me, some very strong US dollar buying, but we're just not there yet. Now we're holding above the key vantage point level. If we bring this up here, you can see that critical level is coming in at 89.67. So as long as we hold above that level, we're likely going to see further dollar gains. But again, we must clear through this resistance area at 90.40. Now, this is obviously this dollar strength is having a significant, causing significant weakness on gold contracts. We've firmly slipped below that key vantage point level. When we bring this up and identify that critical vantage point level comes in at 1334.69. We're closing below that level at 1330, but we're still well within the range here, guys. 1310 to approximately 1368. That is the range that we're dealing with, and we've been caught in this range now, essentially going all the way back to this particular date here. That's back into the the early part of mid-January, so not much has changed here, guys. We're still in there, and a lot of the gains that gold made were on the back of that infrastructure spending announcement. Gold immediately moved higher when they talked about adding further debt to the U.S. Twin deficits. So we'll see how this one plays out. But gold right now, we've got a strong trend line coming in at 1330. The vantage point critical level coming in also at 1330. So we'll see if this level holds. If it does, we could see a potential reversal. But the vantage point, additional indicators from vantage point, our predicted RSI is at 48.9. Predicted MACD and the trigger basically falling lower. And our predicted differences are essentially dead flat here. So not a lot going on, still range trading there. Light sweet crude, basically we're starting to move up a little bit higher here now. But they're following the move up in the equity markets. Now, with the critical level in oil this week, that's going to come in at 62.12. A break of that will, if we can hold above 62.12, gold should make further gains. But I think that any upside is limited to the 60.67 mark, as again, we're simply following within the same range. Now, we do have higher lows. That's a positive for oil. But again, all of this is the contracts in oil, in my respectful opinion, are being fueled by the equity markets. So the S&P 500, we're holding down. We're in a very identifiable range here between basically 25.35 in this upper area towards this 28.80 mark. Not much has changed here. We're smack dead in the middle of the range, probably one of the most dangerous areas to trade anything when you're in the middle of the range, because it could very much go either way. So in this particular case, we look at the VIX to see if it will help us a bit. The VIX is sitting right on the critical vantage point level, 1704. If this area holds and we start to see some acceleration to the upside in the VIX index, excuse me, which of course is a volatility index, then that's going to put basically upward pressure on the US dollar and downward pressure on the equity markets. So keep a very close eye if you're an equity trader watching this, 1704, and if you're a currency trader also, because they're all tied in together here, guys, okay? And that critical level on the S&P for this week that we're coming in, we've pushed above it, but we've had a lot of gains on Friday. 27.18 is the area we want to watch, along with 27.16. If we can hold above these levels, then the equities have a real shot of moving higher here. But right now, my optimism on that remains heavily guarded. Now, as we come into some of our main currency pairs, starting with the Euro-US, once again here, guys, keeping our trading simple. We're basically range trading here between the 125.30 and essentially just around the 122 area. Now, the critical vantage point level comes in for this week. We're going to be coming in at, you can see their long-term cross point, 23.24. So we've closed below that level at 23 or 22.94, excuse me. So we're going to see if we can stay below 123.24. If we can, that should open the market back up to a move towards the 122 area. But again, we are range trading, guys. Currencies are actually, the majority of the markets are only trending 20% of the times. I say this on a regular basis, okay? And it's just a factual, you know, the market is only trending 20%. So 80% of the time, we're playing a range. This range is very identifiable, guys, and the area within that range, 123.24, is what we need to keep our eye on. Now, the additional indicators from VantagePoint are still pointing lower on the euro. We've got 47.4 on the RSI. Predicted MACD has crossed the trigger to the downside, and our predicted differences are firmly below the zero line. So with all of that said, excuse me, Great Britain US is very similar to Euro US. Now we've got some Brexit concerns coming up this week. We're sitting in a very, very tight wedge formation here with our lower trend line coming in at or about the 139 area, the upside coming in around 141. The key vantage point level, 139.56. We've closed right on that level. So if we break through that vantage point level and we push through this trend line, we will be going lower. So right now, our predicted MACD trigger is a very interesting indicator because you can see that we're below the zero line. Our crossover in our predicted MACD took place several weeks ago, and our predicted differences are all tangled up around this zero line with a very mixed signal, but it is pointing lower, that this is not a strong trend to the upside. With the Brexit fears, we probably will move lower on this particular one. Now, with the US Canadian for next week, this has been a very interesting trade here. The strength of this coming off the lower trend line, the Vantage Point indicators really never said to get short on this one at all, but they are starting to lose strength here. So when we look at some of the new indicators from Vantage Point, our predicted MACD, we'll start with this one. You can see the predicted MACD cross losing some strength here, but we're still above the zero line. When we look at our predicted differences, again, they are pointing lower. So probably what we're likely going to see is a corrective move. The area to watch for next week, guys, 125.67, this critical vantage point level. If we break through that, then we are likely coming lower into this, back into this 124.90 area. But again, watch these critical levels. The trend line breakout point is basically intersecting with the Vantage Point medium term cross at 126.22. The close right on that level at 126.30. These are the levels we need to watch very, very closely. Now, as we come in and look at our dollar yen for next week, the dollar yen is a interesting pair because it just doesn't matter whether the equities go up or down. The dollar yen just keeps moving lower. So when we're looking at this for next week right now, we've got a new trend line on the upside that basically has formed, I should say. And that's intersecting between the Vantage Point medium term and long term critical levels. Those two levels, of course, I'm just going to bring this over so everybody can see this here. And again, those levels are 107.98 and 107.17. So basically any move towards the Vantage Point 18-day predicted moving average at the 107.98, 108 area to round it out, we see a failure here. So our predicted RSI has not retaken the 40 level. Our new indicator, our predicted MACD with our predicted MACD difference, we're going to bring that into, you can see that it's basically dead flat. So this thing could break either way, but right now we're in a range between essentially, in my opinion, 107.80, or let's just say the 108 area, and this lower end of this range at 105.70. The market is not showing its hand here to any real degree other than to say they are buying yen on any kind of or rally in dollar yen. They appear to be basically selling US dollars against the Japanese yen. So when we look at our final two commodity currencies, we have Aussie US and New Zealand US. Now, with these two particular pairs, they will be tied to gold here, guys. If gold can advance higher, then this pair can advance higher. But again, you can see that I'll just redraw this trend line on here so everybody can get a good idea where that actually comes in at. Our trend line is going to come off of this particular low right here. We're going to connect the dots, and you can see that we have heavy support at 76.70. Now, every time we've approached this level here, we've got buyers coming in this particular range. So watch the 77.70 mark very closely. If it continues to hold, we're likely going to go higher. Now, the predicted RSI at 41.2 is actually very close to a breakout point on the downside, not the upside. So if we lose the 40 level on the predicted RSI, then we're going to likely see a bigger move down. Okay, so keep an eye on that. Our predicted short, medium, and long-term differences, they're struggling also to put out any kind of firm buy signal here on this, but we can see our medium term crossing our long term predicted difference to the downside. If we cross-reference that to the upside resistance areas at 78.60 and 78.83, then basically selling into those two levels is absolutely reasonable at that time, but we just have to be very cautious because, again, the market is only trending 20% of the time, guys. So the probability is we're going to stay range trading. So if this area holds, we're just going to round it out, say 77.50, then the Aussie will rebound. But at this time, I'm not convinced that's going to happen unless we see a corresponding rally with of course gold. New Zealand, guys, basically the same deal here. We're going to draw our trend line in just so everybody can see this nice and clearly. We're going to take it off our 2 points. And again, when we're looking at this, we want to make sure that we understand how to essentially draw these areas. Whoops, sorry. Okay, let's draw this in so everybody can see. Our key support level down here is coming in at or about the 72.75 area. So our critical vantage point 18, or our long-term area, I should say, excuse me, is coming in. I'm just going to drag this over so everyone can see. 73.16. So we're basically closing out at 72.91. We're all tangled up right around these key vantage point levels. But again, you can see that medium term crossing over the long-term predicted difference in the opposite direction in which the market's moving. So I'll highlight this area right here. And the actual, where VantagePoint was calling this, is even coming even higher back in this area up here. So essentially, guys, we're more or less playing a range here. If we look at this particular range, we can see that that range is coming in between 74.50 and this lower part of this range about the 72. So that's what we're dealing with here. Okay, a lot of trade for next week will depend on the intermarket correlation. So keep a very close eye on the VIX, the S&P 500, and of course those gold contracts if you're trading heavily in the Forex market. So with that said, this is the Forex Weekly Outlook for the week of February the 26th, 2018.